In regards to the property market overall, we've seen that what is the primary driver in the market right now is owner-occupier. It's not an investor-driven surge. It's absolute owner-occupiers looking for somewhere to live better than they used to have to survive any future COVID lockdowns or issues, and recognizing that if this is the world, let's have a better lifestyle. And that's what the focus of attention is. We're also seeing the fact that a lot of the owner-occupier activity is because it's now, thanks to those interest rates, cheaper to own a property than it is to rent. So many people have been putting off the decision to own, waiting and spending the money on holidays. They flipped around and started owner-occupying. Have you missed the boat? I don't think so. I think we're at the beginning of this push, not the end. And a lot of that is because it's not boom or bust mentality. This is genuine demand with lack of supply, with a market that one of the largest stimulation factors being population growth is at record low levels. So to me, I don't think we're anywhere close to where it's going, but you have to be careful of what you're buying. Risk is genuinely in the market. There is no doubt about it. You do not want to buy for the sake of buying. You're going to have to buy something that is really, really nice at a price that you're going to have to pay more than you're willing to pay, but you've got strength in the quality of that asset. But if you just go, that'll do, and I'll pay a crazy price for that, I'm not sure you'll be happy with that decision later on. Whatever you buy, recognize that there's risk, and the single best way to mitigate risk is through quality. Buy the best property you can afford, whether it's location, size, view, features, whatever it is, get the best property you can afford and then enjoy it. That's the key. Incredibly, investors are still sitting on the sidelines. One of the key reasons for that is just natural human nature. Everybody knows that there's opportunity to be made, but everybody is still saying, well, have I waited too long? Is it too late to buy? Will it come back? And let's face it, when you're buying a property, particularly if it's for investment, you want to pay the least you can. So when prices are rising, you're not inclined to jump in. You're hoping that they calm down or indeed fall. But it's unlikely that's the case because it's not investor-driven movement in the market. It's owner-occupier genuine demand that's pushing prices. So if you want to be an investor, you better find your place in there and nuzzle your way in. And be ever mindful that migration is on pause. And I'm warning you, that is only likely to be for the next 6 months max, maybe 12 at a push as it trickles back in. But when that opens up, expect a flood of not just people, but capital. And they're going to want to live in a lovely house and start a lovely life. So get ready for that, it's coming. Confidence is not dwindling, it's still growing in the marketplace. And of course, as these results get good, so too does confidence. Oh, if it's going to go up, I might as well get in so I don't lose out and pay more tomorrow. It's just, nervousness at price points, but the inevitable reality of requirement is still there because of the genuine market. And what you do need to do is, if you've been lucky enough to be an owner for the last 5, 10, 15 years, you would have been benefiting from hopefully improvement in your purchase price. You've now got equity built in your property. Now, you should look to activate that equity and use that to go buy your next investment property, your next home. Look at what you can do to see if you can take advantage of the natural uplift and benefit further from releasing that equity for further acquisition. And just always be mindful that the key decision maker at the moment, and usually always, is lifestyle. So pick a property that is extremely livable, is extremely well located, and the best value you can get for your budget. One of the things that you do want to be very mindful of is what I call the release and relocate bonus. And that's, as I say, particularly in New South Wales and Victoria, people selling their properties in good quality, high value suburbs and then relocating particularly to Queensland. So that bonus in Queensland is going to be an uplift in prices because not only are they coming with cash and intent, but for them, everything in the Queensland market is unbelievably cheap. And again, that emphasizes my point on quality. Those people with money are not going to buy second-rate property. They're not going to buy other people's mistakes. They're going to want the best quality in the best suburbs, and they've got the cash to win at the auction. If you want to be in that market, then they will take you up, with the ride to more profit. And that's what you want to be doing. Again, genuine buyers looking for genuine homes to live in and upgrading their lifestyle because they can afford to. So get in and get your share. And that's what you have to do if you want to really make good money is follow the money. Where are those people buying? Where are the expats buying in Sydney? Where is the money in Sydney getting its next home? What's going up with upgrades in Perth? Look at where the money's going, because the money will take profit with it. It'll do improvement of suburbs, regeneration. It'll do renovation to make an old area look good and new. It'll do all sorts of wonderful things that usually end up in higher than average profit. And that's what you want to do. Enjoy the lifestyle, get a better area, maximize your budget, and you'll be fine if you make the right choice on the right property. Interest rates are fantastic, but they're not essential. So I'm not one of these people that'll say to you, oh, interest rates driving the bubble. If you look at it, I'll show you soon. The lending ratios are not getting any higher. The banks are not handing it out like lollies. They're going through rigorous assessment processes. So yes, interest rates will impact, but you'd be surprised how many people have got low debt, no debt positions now, particularly when they've sold up in somewhere like Sydney and gone to Queensland. So don't think interest rates are the driver. They're certainly an enabler. They're certainly a great assistance, but they're not going to get you over the line and push prices up any more than they would have if someone didn't have the money. If you look at where everywhere is, I've just updated this and we've pretty much got all these on track. Darwin I had in the red last year. It's had a good year and I still think it's opportunity, but you've got to be very careful. Sydney I had just on the tip of the area of best opportunity, and we picked that one perfectly, as you'll see with the stats. Perth is doing nicely, but still has not yet really got its legs going. Brisbane and Melbourne are doing phenomenally well, and Adelaide's having a great year as well. But I will preface, particularly with Melbourne, that you don't want to be buying these small apartments. Now, Sydney as well as, but Melbourne in particular, there is a glut and oversupply and vacancy factor through the roof in apartments that are unlivable, that were previously student or tourism. You do not want to be buying someone else's problem at any price. If it's not a good sized apartment in a good location, don't touch it. But if you're picking up a bargain on a quality apartment, go for it, but make sure it's livable, make sure it's sized right, make sure it's well located. Houses, townhouses, similar rules apply. It's just usually a lot easier to achieve. But you can see everywhere in Australia at the moment is looking really good from a buying perspective.